Hello everyone, I'm Prabhat, co-founder at InvestMyFunds. Welcome to a new episode, Know Your Fund Manager. क्या आपको भी ई-कॉमर्स, एडटेक, क्लाउड कंप्यूटिंग, इलेक्ट्रिक व्हीकल फैसिनेट करती है? क्या आपको भी नई टेक्नोलॉजी का यूज़ करना पसंद है? इसी अपॉर्चुनिटी को देखते हुए SBI म्यूचुअल फंड एक नया NFO लेके आ रहे हैं, SBI इनोवेटिव अपॉर्चुनिटी फंड. टुडे वी हैव Saurabh Pant, fund manager at SBI Mutual Fund. Welcome, Saurabh.
Thank you.
So let's start with a short summary about this fund and how do you see this sector?
So your question is, how do you see this particular thing?
Yeah.
See, basically, just to step back, when you kind of talk about innovation, and particularly this fund that we've launched on that theme, it's very first thing is we need to define what is innovation, right? So we've articulated how we look at innovation, and we've broadly defined this in 3 pillars.
Okay.
So the first pillar being where we are saying is that we look at companies which launch innovative products or services,
Okay.
which are probably disruptive, and therefore will create use case which are not being solved by the existing company, right? They do something different in their products and services, create newer use cases, and therefore take significant market share, right? So that will be the first pillar. The second pillar will be companies which are doing process innovation, right? Though process innovation is a very wide term, every company does process innovation to become more efficient, to lower their cost, enhance their profitability and be relevant. But what we mean by process innovation is there some distinct innovation in the processes which create competitive advantages which are durable. Said another way, where we think the companies can create moats in their business which probably will not allow others to come in, right? Or it'll be tough to compete with these process innovators, right? And therefore that will be the second pillar. The third pillar will be which are companies which are agile, which adopt or which also adapt. So when I say, for example, there could be some company which is disruptive, it gets a product or service first time in the market, but there could be some company which comes after a while, it adapts to this technology or embraces this change, and therefore adopts and moves and eventually does a better execution job and becomes a winner, right? So we've defined innovation in these 3 buckets, and therefore this particular theme will also it's just not it does not address just one sector. It goes travels across many sectors.
Okay.
So it's being a thematic fund, it's a little slightly broader theme.
So let's start with a few questions we have in line. So as you know, the market is all-time high. How do you see launching this product at this time where the market is today almost all-time high?
Sure. See, generally for equity, there's no right or wrong time to invest, right? And therefore, though we are cognizant about the valuations, in equities, which probably makes us believe that investors need to tone down their return expectations because the price you are paying today is fairly steep, for stocks. So obviously that is at the back of our minds, right? But when we launch products, it's never based on particular market timing, right? We generally, when we conceptualize and sell new products, we generally, believe whether there is, one, a product gap for a particular product, and second, whether, can we create some differentiation? Whether that particular theme has a long shelf life. It's not that we are looking at, we believe that this theme is going to generate superior returns in 1 or 2 years and investors are going to benefit out of it. That's not the reason, right? It's probably whether this theme is long enough, whether this theme is strong enough for us to generate sustainably healthy returns over long periods of time. And therefore, our product launches tend to be, based more on that, right? But as you said, markets are expensive, and generally 50% of the return for any particular stock is beta, which is basically comes from the market itself, right? And therefore, you have that market risk, clearly, whether buying an existing fund or buying an NFO.
What are the risks associated with this kind of a fund where these companies are highly volatile in terms of beta?
So when you look at the entire spectrum of companies, you will find all kind of companies, right? Because the way I define innovation, there is also a process innovation, and there is also a third pillar around people who are embracing or adapting to newer technologies. So you can find certain established businesses in this theme, right? Not that you'll always find new age companies where the profits are volatile, or probably you are at a very infant stage, or and therefore the business model is still evolving, and therefore there can be risk to capital, right? It could be slightly higher risk from an equity point of view, right? So there will be all spectrum of companies. It's just not new age. But yes, as you rightly say, some of the examples also you spoke about, those are probably business models which are still at earlier stages, and therefore they're still evolving, right? I think as fundamental investors, as equity research analysts, I think our job is to figure whether there is a business case for that particular business, whether eventually there will be unit economics, or it will make unit economics. That means that at some point in time, in the starting phase, you are still like any other business. You are, investing in the business.
Yeah.
The investments in this case can be capital to a certain extent, where you, and then, at some point in time, when you mature, is there a real business case and unit economics that will evolve, right? And we've seen for many companies, right, which could have been, you can go to the US and there'll be many examples in the US where you see that a lot of these companies were concepts at one point in time, and then they became, they kind of, they were adolescents at some point in time, then, they eventually became very established businesses with great cash flow, capability. But yes, you're right, for the point that for every, one successful company, there would be probably 100 companies out there which would have failed. The fortunate part for us is that because we're dealing with public market, generally the companies which kind of come to this stage are slightly more established than what they were during their early stages of financing, right? Whether it was at the venture capital stage, or at the angel stage, or at the private equity space, right? So probably they are a lot more established. They are generally funded. And some of them which are coming to the capital markets or going through the IPO, launching their public offering, don't also need the cash. They are well funded from a balance sheet point of view, right? So I think, though it may seem very risky, from the outside, but I think, it's a risk we can, I think, control in a very good manner.
So when we talk about innovation, it's not restricted to a particular sector.
Yes.
We can see innovation into the healthcare, into the IT. So what are your focus sector where you want to create a portfolio for this a particular fund?
Sure. So we've identified a few sectors. I can talk about a few of them. So obviously there is, IT and IT services. Probably a little, not all the IT services companies, generally the typical IT services companies are into either they're doing, they're making applications, or they're maintaining, or they kind of, migrating applications like that. But it will be a little differentiated, more evolved work within the IT services. Yeah, so IT also has, some of these platform companies. So it will be like probably a little more evolved IT services with these platform companies. That's one sector. Then auto and auto ancillary is the other sector where we think there is a case to be made where after a long time you're seeing some kind of a change, with electric vehicles or adoption of electric vehicles and, hybrids coming through. Probably there will be some winners because of this change. Then there is also, for example, energy where, there are changes around, new energy or also in terms of, use of technology, whether it is in smart meters or in transmission. So that is another sector. There is also capital goods where we see certain companies which are, enabling process innovation, right? They may not be innovating, but let's assume they are giving you certain processes, whether hardware or software, in terms of as applications for companies to become a lot more efficient, right? So those are the few sectors. Probably, it's a wide range of sectors.
So the biggest question comes: who should invest in this fund? What kind of investor are you looking forward to invest in this fund?
Yeah, generally, for thematic funds, the way we would like to approach this is that we can talk about the drivers of the theme, we can talk about the pros and cons of the theme, right? And then generally we leave it to the investors to also decide whether, on a personal note, do they really, do they really kind of believe, in that particular theme? And away from that, there is also, just thematic funds by themselves, we would think are a little more riskier than diversified funds, because these themes, certain themes do well in a particular time period, right? The only good part about this thematic fund versus the other thematic funds is probably there is a little more it's a little more heterogeneous set of stocks.
Yeah.
I mean, they are not really so much correlated with each other, and there is a nice, balance of sectors. And therefore, probably the risk parameter, it's like a thematic, probably maybe a notch below thematic from them.
So what kind of a duration investors should look forward?
Equity, generally, you have to have a long duration. Right? As I said, there's no right time to invest in equities. You are yourself highlighted in terms of the valuation, and things being very overheated from a in the market from a price point of view. And therefore, I think you have to stay the course, right? And the idea with this theme is that whether this, you can identify companies, because of the change and because of the innovation, where there are certain winners, and you just want to ride them and do a good job in selecting those stocks. And therefore, you should stay for the long course. And thematic fund generally, you should stay at least for 5 years in order.
So, if you have to summarize in like a few words, what do you all wanna tell to our investor?
In one word?
In few lines.
What message I would want to give the investors? No, so I think, this is going to be like any other fund where we are going to do our own, research around stocks and find ideas where we can deliver, superior stock returns, superior risk-adjusted return, in fact. And I think no different than any other fund from that point of view.
Okay. Thank you, Saurabh, for joining us.
Thank you.
Thank you.
Yeah, thank you so much. Thanks.